the stock portfolio sit at a combined value of over $29,000. That is made up of over $8,000 in my Vanguard account and over $14,000 USD in my stake portfolio. Going through the portfolios, as you can see, my stake position has gone up quite a lot since this year started, with me being up over 11.5% just this year. My Vanguard portfolio is still doing good, and I've added to my position in VGS, but more on that to come. I've actually started tracking my positions on an Excel spreadsheet to give a bit more of an overview of how they look and how all my positions are weighted, including also the trajectory and how they've planned since I've started investing in them. First, I wanted to go through and break down my American portfolio. My American portfolio is my stake portfolio. As you can see, it sits at over $14,581 USD. My first position is Apple. This was actually one of the first positions I ever invested into, and it's something I've been holding ever since. I've never sold a share of Apple, and I plan to hold it for the time being. The company is so strong to the point where it's one of those stocks, those blue chip stocks that people say they can hold forever. At 186, it's not a stock I plan on buying or investing into anytime soon, but it is something I don't want to sell yet, with me wanting to hold on to the position, even with me being up nearly 40%. There was actually a point in time when I was down on this position, as you can see when things dipped around 120 mark. I continued to invest, and it kind of brought my dollar cost averaging my amount down. So now it sits at $134 per share as an average price. My second position is in Amazon. This is a position I'm still down on, but it is a tiny position at 55 USD. This was a bigger position than I did sell out of, but you can see Amazon has had an amazing run up 31% in the last 3 months. And you can even see the trajectory of it still reaching up, but not quite all the way at the highs of end of August 2022. Overall, this is a position that I'm keeping my eyes on, but I'm not adding to at the moment. I sold it at probably not the best time, but it's not something I'm looking to add into right now as it's been running up as well. Do I think it's a good position? I think it is if someone's getting into it, but it's not something I'm looking to add right now, especially with my portfolio being so heavily weighted into tech. My next position is in Costco. This might seem like a very boring company, and it's something that just pops up everywhere where you go to do your groceries, but it's more than that, and it's been a great investment for shareholders. Over the last 3 years, it's returned 81%, beating out a lot of tech stocks even with this amazing run it had in the 1 year. Overall, it has traded fairly sideways, but I've been managing to make my position bigger and bigger with it over $1,000 in equity now. This is a position I would love to add more to, and I am currently up nearly 7% on it. My average price is around $4.91, so I wouldn't mind if it dipped again and I could buy in. But it is a great way of divesting into a great company that is not tech-based, giving me a bit of a different option, and is something I want to hold long term. It's not something that has a big dividend or something that's going to draw investors in as an exciting investment, but it is a strong, stable company with a great business model. I've spoken and said how I believe the Costco business model is up there with the likes of Microsoft. With it not being signaled to one product, it can consistently rotate in and out with growing memberships and more locations coming and going. Like I said, I currently only hold around 1.9, nearly 2 shares, but it is something I want to grow up into around the $1,500 worth. My next position is another small position, which is Google. This was a bigger position for me at one point, but it now currently sits at around $470 in equity. Overall, Google's been a bumpy ride for many investors, but if you managed to buy in the dip when it was around between the $80 to $90, you'd be loving life at the moment, with the recent run-up it's had of over 19% in the last 3 months. My position in Google is one where I average price of $135. I only have 3.8 shares, and I was investing it a long time ago before the stock split, and it is something I regret selling out of when I did. Is it something I want to invest my money into right now? Probably not, as I've spoken before, with me being so heavily involved in tech already. But it is a great company. I think if someone does have it in their portfolio, it is a very strong, influential. You see everything happening with AI. Google seems to be near the front of it, so I think it's poised to be a great stock and have a great few years in front of it. My next position is JP Morgan. It's a massive bank. Like you said, it's rock solid. Just brought up. You see the things with First Republic. Doesn't seem, it's almost in that too big to fail category that people speak about. But it's had a strong year, up 18%. My position in JP Morgan, I probably bought in at not ideal times. Tried to add a little bit more to on the dip, but didn't buy in enough. And I'm sitting at around $140. So I'm just under at the moment. I have 8 shares, which sits around $1,155 in equity. And it is something that I wouldn't mind adding more to, but it's not on that same level as something like a Costco or even into my ETFs. But if it does dip down to a really attractive price, it is currently below my average, then I'll look into investing into JP Morgan. People don't want to invest into a bank at this time with interest rates and people being feared. You see the certain banks falling off, but when you talk about the top of the top, that's what JP Morgan is. And they've been a strong company for a long time now, and I kind of do regret not buying into this dip. Going forward, the next position is Microsoft. This position has actually grown to be my second largest position out of all my stocks. Sits at $2,757 and is up 26%. My average price is around $264, and this is something that one of those first stocks that I bought in, like Apple. Great recent start of the year. You can just see the trajectory it's been on. Like I touched on with Costco, I think it has the best business model in terms of subscriptions, returning revenue, growth. You see what they're doing in AI, you see what they're doing with their current products. They just seem to tick all the boxes. It's something I love that I'm invested into. When you look at my portfolio, Apple was actually a much bigger position for me at one point, but when Microsoft was dipping so much, I just continuously bought in, and then now it's even outgrown my Apple position. My next position is VOO. This is the Vanguard, basically S&P 500 tracking ETF. It's just dipped under $400 a share, but my average price is $387, having around 16 shares in it. It's by far my biggest position, with it being around 6,466 USD, and I'm up around 3%. For a long time I was up on this position, and then I was down, slowly just continuously buying in, and now it's had a nice little run up, and I'm back in the green on it. And the main goal with this position is just to diversify. As I've touched on a few times already, when I started these portfolio videos, even when I started investing, my whole portfolio consisted of the likes of Apple, Tesla, Neo, and as I've sold out of auto positions, taking gains, I've locked it into VOO, and I plan on growing this to around 50% of my portfolio. I'll go on that more when I break it down in my Excel sheets, but yeah, very happy with this position. If I have any loose money sitting around, I always just chuck it into VOO. I don't really care what price I buy in. Obviously, you like to buy when it's cheap, but it's not something I'm worried about price range. This is something I'm going to hold for the long term. That's a bit more on the stake portfolio. I'll go into it a bit later, but next is the Vanguard Australian portfolio. Obviously not much cash because I've just made a purchase into VGS, but I'll go through it, what the portfolio is looking like. VHY is Vanguard's Australian Shares High Yield ETF. This is an ETF that has your big dividend payers. The reason I decided to buy into this ETF is because, like I said before, it's just diversification. It is a very popular ETF within Vanguard offers. Obviously, they offer VAS, which is probably the most popular ETF, but this is second, and for good reason. When you look at the holdings, it's many of the big names, very similar to what you'll see my next position holds as well, but it's those big dividend-paying, strong, trustworthy big companies in Australia. You look at BHP, Commonwealth Bank, Woodside, National Bank, Westpac. Australian positions might not have the same growth that you'd see in American ones, but I just wanted a bit of a diversification away from America as well. So me adding to this is just another way of getting another bit of income with the dividend payments, while still getting exposure to the biggest groups and companies in Australia. It has had a bit of a rough start to the year, but when you look at its performance last 3 years, very strong. last 5 years strong, and even since its inception has been strong. And that's all I'm really looking for. This is almost like a retirement fund, almost, where I'm putting a bit of money and growing this position. I want to get it to $10,000 before the end of the year, which I'm well on track to do. And I'll continue to grow this, and then maybe even use some of these funds towards going to a house, or just consistently keep getting these dividend payments in and seeing how much it can compound and how much it can grow. My next position was VLC. This is Vanguard's Australian Large Companies Index. I have around $4,888 in here, which is around 68 shares. In terms of its holdings, it's very similar, as you'll see, with the last ETF. It holds the largest companies here in Australia, likes of BHP, Commonwealth, and so on. In comparison, it does have a larger weighting to each position, as it just holds the largest 20 companies. As you can see, it's around 16% to the big players, and you go down more and more, it gets around to that around 3 to 1%. But the reason I chose to sell out of my VAS shares and buy into this is because I wanted more exposure into the big players in Australia. As you can see, even in America, the major players such as your Apple and your Microsofts account for a huge market share of the S&P 500 and a lot of their success. This is no different to in Australia. The big players obviously are the ones that pay out a high dividend and have a strong track record that are less likely to fail. So this is why I wanted to invest more money into the big ones. My final position that I hold in my Vanguard account is actually Vanguard's Index International Shares ETF. I have around 24 shares, which is sitting at $2,507. Since I could not invest in American shares through my Vanguard Australian account, this was the next best way to continue to get some exposure into the American markets and these high growth, strong companies through my Vanguard Australian account. As you can see, this ETF weighted is around 5.3% is in Apple, 4.4% is in Microsoft, 2% in Amazon, which are all stocks that I hold, such as Alphabet. Even I used to hold Meta and Tesla. You can see that this is a reason why I wanted to continuously get some diversification in my Australian positions. A lot of these companies are in my stake portfolio, but I did want to say and continue to invest into these companies in my Vanguard account for the long term. My stake portfolio is one I sell out a bit more and I would trade in positions, but my Vanguard portfolio is one I will be holding long term. So using this, I can get both the exposure into the American high growth markets and still get the stability of the major companies worldwide and the large ones in Australia. Overall, that is my Vanguard portfolio, sitting at around $8,095. Next, I wanted to go through something I've been creating here just to get a better look at how my portfolios are weighted, just so I could see for myself and track these on my portfolio updates to give a bit more clarity. My American portfolio is obviously my stake portfolio. You can see that around 44% of my American portfolio is in VOO. Ideally, I'd like to get this to around 50%, but a lot of this has to do with the recent success of Apple and Microsoft. As you can see, their change is around 39% and 27% respectively, meaning compared to the 3% that the Vanguard ETF has grown, they've obviously grown in their market share for my portfolio. The more money I add, the more I'll add into VOO and add into other positions like Costco, eating into those Microsoft and Apple positions. Again, I'd like to grow my Costco position to around 10% and keep everything else pretty similar. In regards with my Australian portfolio, it doesn't have the same structure, but I will be sitting down and planning what I want to do once I reach the $10,000 invested mark and see how much I want in each position. What I've also done is I've tracked, since I started doing these videos, and tracking it on my portfolio balances. Obviously, I've been investing in my stake portfolio for a lot longer and more years, but I've only tracked on here since it was around that $17,000 mark. It's now gone over $21,819. This is at the start of the month. And my Vanguard portfolio, since when it was at $2,926 all the way up to $7,553. So at the end of this month, and the start of the new month, I'll put in the new figures, and that will give us the figures for July. But it is nice seeing this, and seeing how the portfolio is growing, in comparison to where I've been putting my money. You can see the stake portfolio has had a very strong, steady line, tracking up at a nice comfortable rate, and that's even with me not investing into it, just the growth. In comparison, you can see where my Vanguard portfolio and how I've been heavily investing into it. The goal has been to get it to $10,000 before I start adjusting and putting money into my stake position. I'm well on track and should be able to hit that mark, hopefully by August or September. I'll continue to show these graphs just to see how they track and keep it updated on how my portfolio is weighted. Overall, those are my two positions, and together they sit at around over $29,000. This was a quick update on how it's looking and how my positions are weighted.